Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, November the 2nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A lot of stuff going on across the pond in the form of PMI, Purchasing Managers Index. This in Spain came in at 53.3, expected 52.7. Italian manufacturing PMI came in slightly lower than expected at 50.9, expected to be 51.3. The French final manufacturing PMI came in at 51.8, expected 51.3. Then we also got the German manufacturing PMI came in at 55, even was expected to be 55.1, so right in line with expectations there. Their construction PMI came in at 52.6, expected to be 51.9, so a little bit higher on that front. All in all, those PMI numbers pretty much in line with expectations across the pond. Then here in the United States, we got the ADP non-farm employment change came in at 147,000 hires, was expected to be 166,000 hires, so a little bit lower than what was expected there. That is a pretty widely looked at number just because we have unemployment, the non-farm payroll number coming out on Friday, which is the big number everybody looks at, but that should give people a little bit of an idea as to what is expected there. The big thing going on today in the form of news is we have the FOMC minutes or FOMC statement coming out and whether or not they're going to increase interest rates. So I don't really expect them to move interest rates right now or anytime soon, maybe beginning of next year, but I really just don't see them doing it right before holiday season. So having that said, we did have that crude oil inventory number today. ADP last night showed a build, one of the highest builds in 6 months, but today we got the crude oil inventories number from the DOE, 14.4 million barrel build. That's that big, huge influx of oil that I've been talking so much about. It seemed like took a lot longer than I expected for it to get onto the market. They were expecting a 1.6 million barrel build, so the biggest build in 34 years for crude oil. So it wasn't just that inventory that was bobbing around in the ocean or in the Gulf from those hurricanes. There was also a big influx of oil that was like a 28-year high or something ridiculous like that. So all of these manufacturers here in the United States, we got the Balkan oil fields. Once it gets above 50, those guys start producing, and we also had those rig counts. Remember, the rig counts have been ramping up ever since February, so the rigs are really pumping out. So a lot of influx of oil right now. So finally got that number out of the way, and as you can see, crude oil down $1.37. It was down $1.50 earlier on today, but below $46 a barrel, and it is right back to the point of control, which is the most time and volume where it's been spent. So that's going to be the comfort zone. We'll have to see. It could continue to slide here with that much oil out there and the economy not really taking off for all intents and purposes. On to gold. Gold pushing a lot higher today, up $17 and above that line in the sand of $13 or $13,000. So that is going to be a psychological level for the bulls to get above. We're also above that 50-day moving average. Yesterday I talked about it. I think I actually misspoke and called that the 200-day moving average, but it's the 50-day moving average. Finally got above that today and did not stop when it saw 1300. So the bulls in control right there. they've got a lot going for them. Bonds right now down, or sorry, up just 3 points on the day, 3 ticks. They were up a lot bigger on those economic data points, but have since taken back some of their gains. This line getting very close. We probably could easily see this line cross next week, despite the fact that the FOMC probably does nothing. We could easily see that line look to cross, and that becomes a very bearish signal. So keep that on your radar. Onto the Dow Jones Industrial Average, pretty much an inside day across the board on the equities. The Dow Jones down just 10 points, but just sitting inside of yesterday. I don't see today being a big market mover with the FOMC coming out with their results. I think a lot of people are just shoring up their position and making sure they're hedged appropriately. Then NASDAQ just down a little bit on the day, down just over a point. E-mini S&Ps balancing right on the 200-day moving average. Yesterday we broke below that, got above and settled above that, which was a nice win for the bulls defending that area. Today we are basically bouncing back and forth along that lines. It's going to really be determined what the FOMC does and what their statement is in regards to that once that starts getting filtered out. As you can see here, just a lot of jockeying back and forth. That's just basically people hedging up their positions, making sure that they can't get hurt in any unforeseen announcement. So don't really see the market doing anything but kind of moving sideways from here. On to a few things that I've done. Same thing with me, hedging up some positions, making sure that I don't have any unforeseen risk on the table. This S&P trade that I've had on for quite a while, I had on the November 212 215 put spread in there, and I originally paid $1.20 for that. Got out of it for 30% profit, sold it at $1.60, just slightly better than a 30% profit on that. The reason why I got out of it, we saw the market come down. It broke through my short puts, the 112 puts, so I made the entire length of that. But in that time, as a put spread has a tendency to do, we've seen the implied volatility start to increase, and that's not just due to the FOMC. A lot of it has to do with the election. We're seeing the VIX start to cruise up. It was up into the 19s early on today, so a lot of volatility starting to be embedded in the market, making those long options difficult to decay, because as volatility increases, it kind of holds off theta, and it's not allowing that to decay really quickly. So despite the fact that this went right through my short call, it's just not decaying very quickly because volatility is starting to increase. So I just decided to take that off anyway, and a 30% profit on a debit spread, especially a debit put spread, is pretty good return on investment for sure. Then in YHOO, I just put this one on just because actually I took this off and it was because of reaching the 50% of my max profit on this, and I had on the November 38 puts, and I originally sold them for 39 cents, bought them back for 18 cents today, so 50% of my max profit on that one. So that one worked out nicely for me there. That's about all I got for you guys today. Friday's webinar is going to be on long straddles. So anytime there's a big market move or expansion and volatility, that's the time to put these on. We're seeing the expansion and volatility go on, so that can help just for an unforeseen event like the FOMC or this election. So that could be the perfect culmination for that, because there just might not be anything that happens afterwards, so we could take advantage of some expansion and volatility with that trade. All right, I'm also working on trying to get out of some Lulu. It's just not working out. Volatility is starting to expand a little bit, so I'm going to look to take a little bit less than my 50% of max profit on that today. Just started feeling like it wasn't working out. I'm kind of sick of looking at it, and decided to might be the time to cover it for a little bit of a profit. All right, that's all I got for you guys today. Go to protraderstrategies.com, sign up for that webinar. It should be a really good one on the long straddles. All right, if you can't take that, take it easy.